2. Mic check 1 2 1 2. This is not financial advice. Let's get it, baby. So, as you roll in, I want you to double check if you're subscribed. We are literally this close to being at, let's call it, 450,000 subscribers. Let's try to get there. And you know what else? Let's also think about, if you hit the subscribe button, if you hit the notification bell, and last but not least, let's think about where you from, baby. Let me know. Oh my goodness. Linda from North Carolina, from Raleigh, North Carolina. I want to just tell you something. You know how I get when we get into the building and we think about, you know, where's all of the family from? Linda just said she's from Raleigh, North Carolina, and I want to just share something personal with y'all for a minute. My entire life, I only knew who, going up past generations, like looking back into my history, I only knew who my great-grandmother was. But in the last, let's call it recent times, I've been looking into how far back could I find with my ancestry, looking at death certificates, looking at all of these different things. And then I find out that a lot of my family in history, my great-great-grandmother, great-great-grandfather, are from Raleigh, North Carolina, or at least they lived there for the majority of their lives. So that's crazy. And I'm talking 1800s, family. So that's a little piece about me. But let's keep it going. Yo, let's get it. I see Cleveland is in the building. Shout out to the whole everybody. Let's go. Let's go. I see Chicago is in the building. Miami, Florida, Los Angeles. Happy Thursday, baby. It's the 17th. You said no notification today. You know they like to play these games with us, baby. So let's talk about it. I see you. I see Pennsylvania is in the building. I see Texas is in the building. We here, Texas board. I see you, St. Cloud, Florida. Yo, let's go. Miami, rep your city, rep your town. Tuskegee, Arizona. Yo, come on now. Let's get it, baby. Yo, Don DeMarco for the family. We here. We got a lot to talk about. So let's start it off here. The first banger, like you already know, AMC Entertainment. Now, I'm not telling you to buy, hold, or sell. I got your back. Oh, yeah, just also another thing. Shout out to, major shout out to my guys. Hold up. Stock Mo. Shout out to my guys, Stock Mo and Larry Jones. We just did a video yesterday. Stock Mo, Larry Jones, Keenan Grace. We had to come together and show solidarity and show through these hard times that, you know what, we sticking together and we sticking with y'all. So again, check that video. Shout out to Stock Mo. Shout out to Larry Jones. Now, if you go over to their page, you find yourself over there today, tell them Keenan sent you. Just so they know that I'm over here showing love and we all collectively have each other's back, baby. So now, let's keep it going and let's talk about it. So, like I was just saying here, and let me X out of this, we got a whole lot to talk about. You don't want to miss this one. So, the first thing we're going to talk about here is we're going to start off with AMC. It's $29 the time I took that screenshot, but let's see what it actually is at the time of this recording. So it says, specifically right now, we're at about, in the pre-market, at $19.45. So basically the same price as this. But we know yesterday, your boy, Adam Aaron, he announced this. And we just want to update and literally talk about some of the things that he's not behind the 8 ball, but let's just talk about it. You said Avengers Assemble? Let's get it. Let's get it. So, you know I had to go live with my dogs. But let's go. So, Adam Aaron, he said this. He said, well. And we love to see the big dog. We love to see Adam Aaron getting in on this because now you said value all day. T-Rob, shout out to you, baby. Starting us off strong, keeping us in the green. Here we go, keeping us in the green when the YouTube algorithm is trying to keep us in the red. Much love for the super chat, big dog. Here we go. Bang. Shout out to you. So, appreciate you, for real. I really do. Now, check this out. He says, well. And Quentin, my guy, you here, baby? Let's go. He said, appreciate yesterday's video. Come on now. We need more of those. Come on. The next one on the list is going to be mine, where we're going to do it on my channel. But I got you, baby. Shout out to you again for keeping the lights on in here. Check this out. Adam Aaron, the silverback, the big dog. He said, well. Would you look at this? The Justice Department is pursuing wide-ranging investigations of short sellers, the people who are betting against stocks, right? And all these other things. He said, no problem, Thor. Oh, yeah, y'all was in the building. Right? Betting against the stocks. And basically this. He said the federal prosecutors are investigating whether short sellers conspired to drive the stocks down, a.k.a. were they working together to do it, right? Now, we already know what time it is. But remember, he said in This is why some people are trying to criticize him, saying he's behind the 8 ball, but he has to watch his words, because you know how I say allegedly, supposedly, hypothetically, nobody's trying to get sued? It's very, very easy for him to get sued as a CEO. So then he's getting criticized. But now that we see him come out with this statement, you know, he's keeping it real general, but we could talk more specifically, because guess what? I'm not having that. So here we go. It says this: the Justice Department is pursuing wide investigations. A lot of people got excited, but I do want to don't get too excited about something like this, because we seen what happened last time when the Department of Justice did an investigation on short sellers. Tell me if you remember this, because we talked about it a lot, right? GME, AMC, the Department of Justice announces, and DOJ, Department of Justice, announces an ongoing investigation of short selling in an off-site document storage facility burned to the ground. Stop the cap. They said, look, you thought you was going to arrest us off of this? You thought you was going to catch us? Stupid. I'm not going to let you get the They're not going to let you get the chance. They're going to burn it to the ground, right? So we already made a whole lot of videos about that, explaining the laws and everything going on with it, but it was spooky. And they said, guess whose facility it was connected to? TD Ameritrade, Charles Schwab, all of these other things. But this was the last time when the Department of Justice said that, this is the last time that they said they was going to basically do an investigation. And, yo, family, put some fire in the chat for these Department of Justice investigations, because we know when the Department of Justice investigates, here come the fire, baby. Here come the fire. And that, yo, I wish I had something that could signify a fire. I don't even know. Let me see. Nope, that's cheering. But you already know what time it is. We just gonna wait. Let's keep it going, right? So check this out. We got some good news. They're telling us, you said they had to cover it up. Right, fire in the chat. So check this out. You know we like to have fun over here. So there's starting to be good news on GameStop. There's starting to be good news. Oh, even better. Fire in the chat. I want to see some fire and paper in the chat. I'm going to the chat right now. I'm going to show you what's up. I'm going to show you what's up. You know how we say we always got the receipts? We always got the receipts. But you know what happens, family? These short sellers, they said, oh, no. You got the receipts? Oh, it's time to burn those, baby. It's time to burn those receipts. They burning the receipts. Check that out in the comments. They burning the receipts, baby. They said, no. We setting them receipts on fire. Burn, let it burn. Hold up. Let's get demonetized. Hey, Siri, play Let It Burn by Usher.
I don't understand why she's burning me.
No, let's chill. Let's chill. They burning the receipts up. They said, look, come on now. It's time to let it burn. So Adam, Aaron, you know, hopefully that you put the light on this and you highlight this, and then the people, we could stop. Hold up. Do y'all remember this? Only you could prevent storage fires. Or was it forest fires? You be the judge. Was it off-site storage fires? Offsite or was it forest fires? I can't remember. Sometimes I get a little shaky like this, and I can't remember. But only you could prevent off-site storage fires. I think that was how that saying goes. That bear from back in the day. But let's keep it going, right? So there's some good news on GameStop. There's some good news on AMC. But what's crazy is the mainstream media, they so wishy-washy. They trying to flip the script. Hold up, I didn't mean to play this Usher thing again. I ain't trying to get demonetized 100 times out of 100. I appreciate y'all, though. Here we go. y'all, fuck. Somebody say it's forest fires. I thought it was storage fires. Now, I know it's forest fires, but it's not even Keenan Grace radio yet, and I'm rhyming already. It's only 9:25. But here we go. Let's keep it going. You say you for real? That building, yeah, I'm telling you, that building is smoked. So you said quote with Smokey the Bear, right? Only you can protect or prevent storage fires. So here we go. You said everybody loves Smokey. Yo, I'm glad y'all remember. So all right, let's get to it. So check this out. It says right here that GameStop and AMC, aka what they like to describe as meme stocks, anything a retail investor or retail investors by and large are investing in, they would describe as meme stocks, right? So check this out. They said in recent times, the meme stock trend, they thought it was coming to an end. So the trend coming to an end. And they said GameStop and AMC recent performance has proven otherwise as of February 17th. Notice that they always, and family, again, make sure you hit the like button so we can combat this algorithm that's trying to suppress us. You know what time it is. So here we go. Let's check out what they're saying about GameStop and what they're saying about AMC, because they're saying that the meme stock trend is starting to pick up, right? And let's just keep our ear to the ground and see what a lot of the time mainstream media is led by short sellers and haters. So here we go. They said some investors are jumping back into aggressive plays like GameStop, for example, and AMC Entertainment. Why is this somewhat positive news? It's somewhat positive for the sole fact that at least they're not being bashed by everything in the mainstream media. However, you could just bet that it's going to happen, right? So here we go. They said this. A few highlights are some catalysts that are instrumental to the recent rebound in GameStop and AMC. So the first one is this, and I was shocked to see this. GameStop and AMC, they're saying a recent rise, they're calling it fundamental catalysts. So generally, when AMC convert, I don't even know what this is. So generally, when AMC and GameStop will run up, it would be like the small short sellers, like the little baby tiny institutions doing a little bit of covering, right? Just a little bit, not a lot, but somewhat a little bit of covering. Now they're saying that, no, this is not that, or this is not retail running it up, because retail investors are holding by and large. They're saying that GameStop announced a partnership with the blockchain platform Immutable X, and they will work to produce GameStop's own platform and NFT marketplace or market space and marketplace. So now they also said that development is highly anticipated for GameStop in this case. And then they said that Ryan Cohen, who is the CEO of GameStop, and let me zoom in for those of you in the back. I know you have to get your reading glasses. He's the chair of GameStop. He said that investors are waiting for the e-commerce projects to basically modernize GameStop's antiquated business of basically selling like CDs on discs. So what happened with GameStop, which was really hard for them, was, you know how when you get the PS4 to PS5, then what can happen is you can basically, shout out to you, big dog. You said I mentioned your name. Burn Sheep, yo, let's go. Appreciate you for the love, big dog. Much love. Keeping the lights on here. Shout out to you for the super chat. And they said this. They were selling CDs. They were selling like the games, right, on the discs. But now when people are just downloading the games from the PlayStation Store and the PlayStation Network, you already know what time it is. They basically just said, okay, we got to flip the script. We got to get into NFTs. We got to make some money. So now let's keep it going. It says this right here. AMC, and I've never seen this in the news. I've never, ever, not a day in my entire life seen this in the news. And it says AMC's recent movement is fundamental based. This is a total, basically 180 from the mainstream media where it was facing this way, and then boom, they turned all the way around. And it says AMC seems the recent movement is from fundamentals. The Q4 results, remember how Spider-Man was going crazy, the movie? And then they said anticipated the strongest quarter the company had in over 2 years. And then it says this, the highest positive EBITDA, right? Which is the earnings before taxes, all of that, blah, blah, blah. And then they said this, record year-end liquidity. This was the main point. Record year-end liquidity of $1.8 billion. And they said the liquidity is the key to AMC reducing its debt. So then they say AMC going to reduce that debt. This is one of the main reasons why it's pumping up into these 20 levels as of recent times. But there's some more fundamentals that mainstream media, which, again, remember, they're going to flip-flop on you. You could imagine that this is going to happen. AMC Theaters takes 2 ArcLight leases in Washington, D.C. It says this, as of February 8th, they got one in Washington, they got one in San Diego, and these are among the latest acquisitions. And then, check this out. There's a third one, which we talked about the other day, how AMC acquired a former Cinemark cinema lease in Chicago. So, family, they are expanding AMC, and we love to see it. Straight up, we love to see it. So now, let's go to the short interest and everything like that on Ortex. And let me zoom in again so you can see this. Maybe that won't work. So here we go. We got 107 million shares that are being used to short the stock, right? This is 21%. It's down 1.68%, the short interest. Again, this is basically the short sellers basically betting against AMC like crazy. The utilization is 100%, and it was 100% according to this 7 days ago as well. Meaning every share that they had available to borrow at market open, they've basically been shorting it for like 7 days straight, right? Almost non-stop. They've been using literally every share. So then, guess what? We see that the company is expanding. They got 3 new theaters that they're trying to open up soon that they just got leases on: Washington, San Diego, and Chicago. And on top of that, they got a record number of liquidity, basically $1.8 billion to pay down that debt. Come on now. They're expanding. They're paying down debt. And then mainstream media is saying out of their own mouth, because they can't fight it. They can't fight it. Recent fundamentals based movement. Shout out to AMC for becoming better as a company. And you know what? I want to give a shout out to AMC, but I definitely want to give a shout out to the AMC apes and the GME apes. So shout out to y'all. Shout out to y'all. Y'all the reason that this is happening to that company. You don't have to buy AMC. You don't have to hold. You do not have to sell. You be the judge on how you want to play it. But I do want you to understand that AMC is doing better as a company because of the apes and the support, and GameStop as well. Zomedica is up 26% yesterday. Wondering where the huge spike come from? It could have came from a potential large buyer. So you be on the lookout for that. If you're playing Zomedica, notice Zomedica it has to be a swing trade, because they have shown you time and time again that they are not necessarily in line, allegedly, supposedly, hypothetically, with being transparent with investors. So make sure that you swing trade it if you want to get in on a volatile stock like that. So let's keep it going. So shout out to this. Shout out to AMC. Shout out to the apes. And now let's see our guy, Charles Payne, and what he had to say, because I want you to see this. Let me mute this music real quick. I want you to see this. Shout out to Charles Payne, because he was recently talking to somebody online. And I'll read this, and I'll give a shout out to the person who posted this on Twitter. This is 20th Century Jon Snow. He says, Charles Payne absolutely unloaded on shorts today. Adam Aaron calls him out on Twitter. Citadel, 7 million, blah, blah, blah. Shout out to Jon Snow. So let's listen to Charles Payne have a conversation about these short sellers, baby. Put an ape in the chat for Charles, by the way. Throw an ape in the chat for Charles and hit the like button on the way as well. Y'all ready for this? Talk to him, Charles. Maybe I gotta reload this. Let me give Charles a second. It's okay, Charles. Take your time. Take your time, Charles. It's okay. Hold up.
I've been doing this for over 30 years.
Here we go. Here we go. Put an ape in the chat for Charles, baby. So here we go.
Well, here's the thing, Brett. I've been doing this for over 30 years. I've taken companies public as a broker. I took my own company public, and I've been a consultant. I know this industry inside and out, and this has been one area that has upset me tremendously for a long time. Now, market purists and you know, these rich hedge funds folks always say, hey, shorting is good. It helps liquidity. It keeps the market running. It's a pretty good thing. What's not a good thing is if you issued 10 shares in Brett Bear Incorporated, and somebody saw that it was worth $100 and thought, maybe I can drive this to $1. It's a great company. So, and somehow they were able to borrow 20 shares. Now, you only issue 10, but somehow they can borrow 20 and sell it and keep selling it and pound it and pound it and pound it and pound it into submission. And along the way, all the investors who believed in Brett Bear Incorporated also lose their shirt. And this is what's happening. This is not about trading. This is about a cottage industry of very wealthy billionaires who have been able to pound stocks into complete submission. It's not about a trade. It's not about them thinking something is oversold. It's about them thinking that a stock is hopeless, that there's no brokerage firms covering it, or that most brokerage firms have a hold rating on it, maybe a sell rating. No one's going to come to its defense. They're not looking for a trade. They're looking for total submission. So all of a sudden, you get a bunch of young investors, mostly novice investors, excited, and they start to notice, hey, if you buy these stocks up, sometimes they get squeezed. So the person that shorted your stock at 10 may have to buy it at 12. May have to buy it at 14. They start getting a little nervous, and on and on and on. This is what we call a classic short squeeze. It's the ultimate short squeeze. Now, what compounds the error, the problem, in addition to these hedge funds already being able to borrow unlimited amounts of stock and artificially sell it, right? This is not a real market. They are making a market to the downside. Now, on top of this, today.
Let me just stop Charles for a second and drop a Don DeMarco for Charles, because he just laid it out. Charles just said, imagine that you have a company that issues 10 shares. That means 10 shares can be bought and sold. And then all of a sudden, the short sellers come in, and this is a good company. And then they're selling 20 of those shares. The only 10 exist, and they're selling 20 of those shares. And then they could sell 30 if they want. They could sell 40 if they want. They could sell an unlimited amount of shares. And then it destroys the company because there's so much selling pressure, and there's no way that the buying pressure could ever match it because they are straight up making shares up out of nowhere, aka synthetic shares. Charles, talk to the people! Charles, talk to the people, please. Go ahead. Let me let you start again.
The problem, in addition to these hedge funds already being able to borrow unlimited amounts of stock and artificially sell it, right? This is not a real market. They are making the market to the downside. Now, on top of this, today you have all of these platforms, including Robinhood, and I say shame on them, who have stopped these same investors from buying the stock. So guess what? They can only sell it. Okay, they can sell it. The shorts can sell it. Of course it's going to go down. It's really a serious injustice. And if something's going to be done, something should be done on the ability.
Yo, shout out to Charles Payne, because I'm telling you, he laid it out. He laid it out straight. And what's crazy is the amount of just nastiness. It's disgusting. It's disgusting just to see how they could trade an unlimited amount of shares. And the reason that this is important is because there's no way to combat it when they keep creating new shares and then shorting them into the market. Now, I want you to understand basics of supply and demand. Just the straight up basics, right? So let me get rid of these points right here. I just want you to understand. Check this out. Let's go to, I don't know, Google Docs or something. So Docs. Let's go to Google Docs. Check this out. Imagine you got a buyer and you got a seller. And this is what we have. We have one phone. You have a buyer or seller, and the content is a phone. We talked about this before. Like this, right? One buyer, one seller. This person has, the seller has one phone. And you're going to see how crazy making up synthetic shares is, right? And this person has, let's call it $1,000. It's an iPhone or something, right? They got $1,000 and they're ready to buy this phone for $1,000. So in the natural world, all these numbers do is switch hands, where you'll have the seller over here. They got one phone. The buyer got $1,000. The seller wants $1,000, and then that buyer gets to keep the phone. So they just switch. What happens to the price of the phone? Nothing happens to the price of the phone, right? Nothing happens at all. But you know how the price can go up on the phone? What if you have a new buyer? And this buyer, in our case, is willing to buy the phone. You got two buyers now. Two buyers. One wants to buy it for $1,000, and the other wants to buy it for, let's call it $1,000 and I don't know, let's say $2,000, right? They want to buy it for $2,000. Let's keep the numbers simple. You got two buyers. One wants to buy it for $1,000. One wants to buy it for $2,000. If you are the seller, guess what? Who are you selling this phone to? Buyer one or buyer two? Who are you selling this phone to? You're going to sell a phone to buyer two. So that means the phone is worth $2,000, right? So now let's take it a step further. You see how a new buyer increases the price? What if we had three buyers and then the third buyer wanted to buy it for $3,000? This is supply and demand, baby. This is simple economics. Which they should be teaching this in school, no disrespect, instead of teaching everybody trigonometry. Trigonometry is great. A lot of people use it. It helps our architects. It helps all of these different things. But this is more fundamental, taxes and economics. So let's talk about it. We had a third buyer in the building. You are selling this phone. One person wants to buy it for $1,000. They could get out of here. One person wants to buy it for $2,000. They could get out of here. One person wants to buy it for $3,000. Oh, they getting the phone. So then guess what? That means that this phone is now worth $1,000 because remember, it's only worth what people are willing to buy it for, right? Oh, let's switch the whole story up. You notice when we add buyers, what we get is a phone. When we add buyers, we get a phone. That price goes up with these new buyers. What if we get sellers? Oh boy. What if we get new sellers and we have one phone and you're trying to sell this phone for $1,000 and then you get a new seller who has another phone, right? So you got one person selling a phone. You got your second person selling a phone. Here we go. Second person selling a phone. And what price? The seller is selling it for $1,000. You got somebody else who just jumped in. They're selling the phone. So then guess what? If they're selling it for $99.999, boom. Guess what? Who you buying the phone from? Or let's keep it round numbers. They're buying it for $500. And you have $1,000. Who are you going to buy the phone from? This is you. You're going to buy the phone from the person selling that same exact phone for $500. This is what you are going to buy it from. What if you have a third buyer or a third seller? It's people, just new sellers out of nowhere. And they're selling a phone. And they're selling the phone for, you know what? $200. Family, you are going to buy this phone from the person with $200. Now, the reason I bring what Charles set up is imagine that the short sellers can create unlimited phones. They can create unlimited phones out into infinity. They just keep doing this. New phone, new phone, new phone, new phone. Who this, right? They keep making all of these new phones, but instead of it being phones, it's shares. It's AMC. It's GME. It's BBIG. It's all of these, what you call the short squeeze plays. It's shares of these companies. And they're creating fake shares. And then what are they doing with that? They are basically, long story short, driving the price down. But they're making money as the price comes down. So then it works out in their favor. And then the SEC, like I told you, about to get demonetized for saying that again. Watch if the stream disappears like yesterday. Hopefully it doesn't. But I want you to understand that the shares, they keep adding all of these new shares, and they're adding because there are more and more and more sellers. So then when you see the short interest going up and up and up, family, this is them basically just selling and selling and selling and selling. And it's bad, I'm telling you. And they just keep getting to do it. And even someone with a platform like Charles Payne on mainstream media talking to the world is saying this. And still, what's going on? You see what I'm saying? It's crazy. It's absolutely crazy that we get to see these things. So let's go over to Stonko Tracker and let's just see what they got going on over there with AMC in terms. Here we go. Let's check them out. At the time that they took this data, AMC was 1985. So green. So it should be green on the day if this data is up to date. And it looks like yes. AMC is pumping, baby. Let's go. Let's go. All right. Now, let's talk about it. Let's look. It says that the short sale rule is going to trigger if it goes under 770. But there are a lot of exempt shares. There are 750,000 shares available to borrow. Remember, not too long ago, there was over 2 million shares being available to borrow. Okay. Let's look at the options right now, the options chain that other people are running with this. So it says the $19 strike, according to Stonko Tracker, how many calls? It says 300 or 35,000 calls at the $19 strike. Let's go and double check because Webull might have that same data. So let's look at the calls on AMC. The open interest is 6,111. But according to Stonko Tracker, it's saying that there's basically 3,500 calls. So there, you can actually sell calls too. So that might be among some of this data that's getting it mixed up. But 35,000 calls, $20, 31,000. You got 22. Come on now, people are running a lot of calls. So it is what it is, and I can see why. And I know the short sellers are selling too, but it is what it is. And shout out to AMC for pumping. We want to see it stay above this $20 range. So now let's transition over. So I'm going to just segment again and ask you to hit the like button. We need like 300 more likes to keep it above 50. So take 1 second. See if you turned like my guy Uncle Larry said, I forget how he said it, but it was like something about see if you hit the like button and make sure that you turn that color from, what is it now? It depends if you got dark mode on, from black to white or white to black. Change that color on that button, family. Let's get it. So let's check this out too. Oh, okay. Now we coming down a little bit back into the 17s. So remember, it's a wild, wild west in the first few minutes. You said that last video was very informative. You know we got you straight up. So now let's check out SHIBA INU. SHIBA INU is currently, remember, many zeros, 4 zeros and 30. Now check this out. I told you time and time again, if you watch my video about SHIBA INU being short sold, they're short selling it. So if you a SHIBA INU holder, put a dog in the chat so I know who I'm talking to, right? Oh, here we go. I already see the dogs in the chat. Y'all know what time it is. Let's go. I love it. So again, I'm not telling you to buy, hold, or sell, but I want to give you the facts so you can be the judge. So we know that the short sellers are basically keeping it in a range. They're keeping it between 28 and let me know if you heard me say this before, because I'm starting to see articles about what I said before. So I said that they're keeping it in between this $28 level, and they're keeping it between the 28 and the 35, right? These are our ranges where the short sellers is basically holding us. So tell me if you heard me say that before, because I'm gonna show you something that I swear that a lot of these institutions, they either in my Discord or they are in the chat with us, right? But shout out to the dogs. So I'm gonna show you, remember, 28 level and then also the 35 level. But here we go. Check this out. Let's go and let's see. This is an article that came out not too long ago on February 17th, and it says this. SHIBA INU is showing a technical pattern that can climb 44%. And it says, SHIB must slice above the neckline of the pattern of 4 zeros and 36. So if it gets past the 35 into 36, then they're saying that they can see it going up 44%. Remember, take every price target with a grain of salt, because they can't tell the future. They like you know who. But then they said, so that was they looking at exactly what I'm looking at. So it says this, if SHIBA INU falls below 4 zeros and 28, then that optimistic outlook is invalidated. Like I was telling you many times, that if it goes below these numbers, and technically they're not exactly wrong on that, but it's a closer support. So take a look at this. So 28, that's the main support, but then 17 is the next strong support, but then after the 17 is 5. It's 5. Many zeros and 5. So we're at 20, we're at 30. If it breaks the 17, if it breaks the 28, we headed to the 17. If it breaks the 17, we headed to the 5 on the technicals. But we would love to see a few things. Yep, data science, I'm telling you, baby. Straight up. Straight up. Straight up. So now let's see what else is going on with them. So, oh man, we got to talk about the Fed. We got to talk about the Fed. So with SHIBA INU, before we transition off of this, is the market cap is up. It's 16.8 billion. So that means SHIB is pumping. The volume, people are buying it. It's up basically 32%. And the buying is somewhat higher than the selling on SHIBA INU. Typical hold, look at this, is 81 days. 81 days. I want to show you how crazy that is. How crazy that people are actually holding on to this thing for 81 days. Let's go to Coinbase. Let's compare this to Bitcoin on Coinbase, if it'll let me. So Bitcoin on Coinbase, if it'll load up, here we go. People have been holding Bitcoin. I don't know if you'll be able to see this. Let me just share the screenshot. I don't know if you'll be able to see this. Let me just double check. So I don't have to share the screenshot. Can you see that? Maybe it's 98 days. This is Bitcoin, right? Right here near my hand. So 98 days they've been holding Bitcoin on Coinbase. 81 days SHIBA INU. What they would describe as a meme token, family, a meme token. Let's look at Ethereum to compare it. Ethereum, I gotta show the receipts. I gotta show the receipts. This is crazy. Let's keep in mind, I would invest in Bitcoin and Ethereum over SHIBA INU, because you got to have a strong foundation. However, in this world, we know we don't have to choose. We can invest in all of them if we want. But I got to show you the receipts right here. Check this out. Ethereum at the time of this recording, and let's move this over. This one is Shiba Inu on the left. This one is Ethereum on the right. And let me make sure I can see what you can see. Take a look at the typical hold time. On Ethereum, it's 76 days. On Shiba Inu, it's 81 days. So SHIB Army, we just found out a new fact about Shiba Inu. People are holding on to SHIB harder than they're holding on to Ethereum on Coinbase. That's absolutely crazy. Absolutely crazy. But remember, when they try to get you in these buy this or that zones, that you ask yourself and you tell yourself, look, I could buy both if I choose. You understand me? So now, let's just take a quick segment and check out ZOM, Z-O-M, because I'm hearing that it's running. I'm seeing everybody in the chat talking about it's pumping. And it is. It is pumping. It's up 25%. Remember, ZOM is a great swing trade. I don't want to hear that so many people is diamond handing something like a spec play that you take what it gives you and then you let it go. If you want to do your research and you want to invest in this company, it is what it is. Do your research on that. But remember, buy low, sell high, baby. Make some money. So now, let's keep it going. Straight up. Yo, that's crazy. Clay's just said this. Clay's coin, shout out to my dog. He said they holding up the Lakers. Oh, man, he said 81 like Kobe. Shout out to Kobe. Rest in peace, Mamba. Rest in peace to the Mamba. Could we get some doves in the chat for Kobe? Kobe 81 like Shib. Shout out to Clay for that. Yo, that's crazy. Let me go put a dove in the chat for my guy. Hold up. Mamba. Here we go. R.I.P. Kobe. Shout out to Shib. Shib 81, baby. Oh, I think Kobe Bryant. Let's go. Yo, Clay, that's such a good point. That's such a good point. Let's take a look. So we got Shiba Inu, which is the typical hold time is 81 days now. Straight up. Now let's look at this. There might be a picture. I could be wrong. It might be Wilt, but it might be Kobe. Kobe 81 sign. Like Kobe with a, yeah, this is it. Yo, somebody make a meme of this and put the Shiba Inu dog right on him. Put the Shiba Inu dog. Put the Shiba Inu dog on him, baby. Why? Look at that. 81 days. Typical hold time on Shiba Inu. We love to see it. We love to see it. Let's go, Sheeb Army. Straight up. That's dope. Somebody make a meme of that. If you can send it to me on Twitter or Instagram or something, or in the Discord, put the Shiba Inu dog face right here on this. That's what I'm talking about. That's what I'm talking about. You know what? We got to go for Wilt next. Wilt Chamberlain. We got to go for Wilt Chamberlain next with the 100. But it is what it is. You know, rest in peace, Mamba, rest in peace. But, yo, that's dope. That's really dope. Shout out to Shiba Inu for that. So, we got some more information. You say you love Keenan? I need a bop. Come on now. So, let's keep it going, family. Look, we learn here, and we have a good time, too. So, now, let's transition over, and then let's see some more information that I got for you, because I jam-packed this one with information for you, baby. So I might have to set up a podcast or something so people who are on the roads can listen to this. So the Fed, they did a talk just yesterday and everything. And let's talk about the nothing burger that they was talking about. But we got some updates on some information too. So it says, the minutes show that the Fed is ready to raise the rates. You know how we've been hearing about the rates raising in March? Family, we already know now what a part of it is going to be. So this was updated yesterday on the 16th, right? And it says this, the Federal Reserve, and watch, I'm starting to believe that the Federal Reserve, they just like being on TV. And that's it. They go there and they say, all right, is my makeup good, right? Just being on TV. He said, Keenan, freaking love you. I love you back, family, my dog. Let's get it. So check this out. Federal Reserve outlined the interest rate hikes, reduction in asset. So interest rate hikes and a reduction in asset holdings, AKA they might start selling stuff and driving prices down. But let's keep it going. We already knew that. They said this. The session showed that they're concerned about inflation. Oh my goodness. That's crazy. That's so crazy. They're concerned about, come on, we already knew that. Why y'all going on TV and telling us what you already told us? Because y'all like being on TV. You want to just see if you know, those bags that was under your eyes, if they better now. Let's keep it going. It says this. They noted that inflation was beginning to spread into the broader economy. Yo, hold up. You know what we doing? We waiting. For what? We're waiting for new information. So we got a little baby piece of information, a little baby piece. And that's this. The Fed to raise 25 basis points in March, but calls for 50 basis points are growing louder. Straight up. So remember, 25 basis points, this is just fancy stock market talk for what? We talked about this before. Whenever you see 25 basis points or 100 basis points, 100 basis points means 1%. It means 1%. 50 basis points means 0.5%. 25 basis points means 0.25. Not even 1%, not even 0.5%. 0.25, 0.25%. Come on now. You see what I'm saying? So they told us that in March that they're going to raise it 0.25%. Now this is news. So let's see the SPY and let's see how the SPY is reacting to it. So it's negative, but it didn't totally tank the market. It didn't totally, absolutely tank it down to nothing, right? So we love to see it. Straight up. Straight up. So you know what time it is, baby. Yep, 0.25. That's exactly what it is. They're constantly frightening the public, and they just going on there. And I wouldn't be surprised if they was just getting on there basically to say, I just like being on TV, man. Let's just keep it real. You said check your Twitter for the Kobe 81, the SHIBA INU 81. Oh, you said you love the live? Shout out to y'all. Hold up. I'm looking, family. I don't see it. Oh, let's go. Let me highlight you, family. Let me highlight you. We got it. We got it. Yo, let me show y'all this, fam. Check this out. Shout out to SHIBA INU. Shout out to 3D Medic Vents. We in a building. Yo, we need this to go viral. Yo, y'all about to make me fall out of my chair. What is this about? For those of you who are just rolling in, SHIBA INU just hit a new milestone. We just got the trading typical hold time on Coinbase is 81 days. It's 81 days. Let's go. Yo, let's go. Let's go. I'm telling you, that's what I'm talking about. That is what I'm talking about. Shib, we getting busy. I love it. Straight up. Shout out to SHIBA INU. Shout out to the typical hold time on Coinbase being 81 days. I'm telling you. Yo, that's hard. Yo. Yo, this is what I'm talking about. I'm coming to tears right now laughing at this. Yo, come on. Listen, it's a lot of people right now who are watching the live and watching other lives and talking about the stock market, and they ain't having no fun. You can learn and you can also have fun, man. But look at that. That's dope. That's crazy. That's crazy. Yo, Don DeMarco. I'm gonna keep that. I gotta make sure I Vince, make sure I message you about this, because this is a good one. This is good. But let's keep it going. Yo, I'm telling you, man. All right. So now that we got all of that out of the way, I want you to see. So there are a lot of distractions that are going on, right? There's a whole lot of distractions going on in the world right now. And oh yeah, I'll share this one. I gotta let me paste this one and take it up. Right, this one might have to go on a shirt. This one might have to go on a shirt, family. That's funny. That's real. That's a good. I might finally have my second piece or my new merch. This might be the new merch. Vince, make sure I message you. If you in the Discord, hit me up. Or email me. My email is in my about page. But hit me up, big dog. So man, let's get it. Yo, I'm telling you, that's funny. That's so funny. So here we go. Let's get back to the point. Let's get back to the markets. I want you to understand that, long story short, there's a lot of reasons that the market is having this volatility. We're seeing a lot of good. You say you loving the vibe? Let's go. I'm telling you, family. I'm telling you, when these stocks come down, when they come down, we don't have to be bent out of shape and crying. You know what I'm saying? We see what's going on with the market and we make sense of it. And we make money. We know how to do the technical analysis. We buy. Also, join the Discord if you have not done so already. I'm dropping technical analysis classes, right? The Discord is linked in the top. It's #1 link, right? Basically, get over there with us. You can get the technical class. You can get in the options class too. So come on now. Let's talk about it, baby. It's time to learn how to make money on this market. We have a lot of fun, but at the same time, we know what we're doing over here. So let's keep it going. And let's also say this. The market, we seeing a support level of about, what was this? 441. The SPY just broke that level straight up. So now what I want you to see is you got to learn how to read the technicals. And when in doubt, you zoom out. And you see that overall, the stock market is going on a bit of a downtrend, a bit of a correction. However, look at the long-term trend. It's up. It's up. It's up. It's up. So don't ever let it make you fear, right? Don't let it make you fearful. So now I want to show you what's going on in the world, because there's so many distractions right now that you would totally miss out on important things that are impacting the market. Like, for example, this. You might get a commercial, but let me make this larger on the screen and move my mic over here so you can hear it well. But things on the market that are actually impacting. Let me read this. There is evidence on, and this is from how long ago? Let me go back before I even click it and just check. This is from CNBC. They posted this 1 hour ago, and they said that there is evidence on the ground that Russia is moving towards an imminent invasion. Why is this important? Because Joe Biden said that if they attack, then we get involved in the United States. And this is going to impact the entire market if we get involved, right? So let's listen and see what they're talking about. They posted this. This is breaking news. This an hour ago.
Breaking news just out from Reuters. Gentlemen, we have some breaking news just out from Reuters on the Ukraine front. The United States envoy to the United Nations says that there is evidence on the ground that Russia is moving toward what they are calling an imminent invasion. They say that this is a crucial moment. The U.S. Secretary of State, Antony Blinken, has changed his travel plans last minute to speak at a UN Security Council meeting today. You can see the futures ticking lower on this news, down by about 85 points. Again, these are March.
Again, notice how she's talking about what's happening with Russia moving towards an imminent invasion, but at the same time, they're showing you the Dow Jones, right? They're showing you how these things are impacting the market because they know exactly, just us getting involved in something like that, how it's going to work. So let's go.
Declines at this point, but certainly the opposite direction from where we were headed a few minutes ago. This has all been following up on news that we've been hearing from Russia throughout the morning, saying that they are, in fact, on the front line, and it will take them some time to remove the troops after the United States called them out, saying they have not seen any troop movement moving away from that. Taking a look at what's been happening in the Treasury market right now, the 10-year yielding above 2%, but just barely, 2.003%. That's a slightly lower yield than where we started this morning. Not sure if we've looked at oil prices through the course of some of this too, but we should keep an eye on that market as well. Again, the futures moving modestly lower on this, and Antony Blinken changing his travel plans today to go to speak to the U.S. through the course of some of this too, but we should keep an eye on that market as well.
What did she just say?
2%, but just barely, 2.0. What's been
Hold up, here we go.
That's a slightly lower yield than where we started this morning. Not sure if we've looked at oil prices through.
Not sure if we looked at oil prices. Remember what this stuff is all about at the end of the day. War, oil, war and oil. Whenever you hear there's a recession, whenever you hear that there's some type of market, larger correction coming around, guess what always is sneaking up behind it, family? Oil and war. Always.
3%. That's a slightly lower yield than where we started this morning. Not sure if we've looked at oil prices through the course of some of this too, but we should keep an eye on that market.
Notice they try to sneak that in there.
As well. Again, the future's moving modestly lower on this.
And then brush right past it as if that wasn't the overall point of this. Oil. And like I told y'all the other day, let me know in the comments. Tell me yes or no if you remember how I was saying that this is really all about the oil in the background. Like, let's keep it honest. This is about oil. This is about the war. And this is about how everybody else is going to get dragged into that. Let me know if you remember me having that conversation with you. And shout out to Rosa. She just said that, let me see, I might have even lost it. Oh, shout out to you. Said best technical analysis class. Let's go. He said it's great and the analogies in there. Let's go, family, again. Shout out to you. Technical analysis class. I love it. I'm glad that you're enjoying it. Straight up. But again, war, oil. That's what it's about. Straight up. It's somebody said, yep, it's smoke and mirrors. And you know what's happening too? It seems like smoke and mirrors, but people are gonna get caught up in the middle of this. There are gonna be people in Russia who are gonna lose their lives behind this. There are gonna be people in Ukraine that are gonna lose their lives behind this. And they're gonna be if this happens, Joe Biden said that we get involved, the United States citizens and people of the military, people of the army, people of the armed forces getting involved. Come on now. You said, yep, GGC, stop buying unnecessary things and let's pay ourselves. That's what I'm talking about. That's exactly what I'm talking about, baby. That's important. Straight up. Yep, y'all remember. And you see she tried to sneak that in there, right? She tried to sneak that in there like, oh yeah, the futures, and then we got to keep an eye on oil and then keep it going. But it's just nasty just to think about all of these different kind of things that's going on in the world and how people get caught up in between it. And I want y'all to just like just really think. And I'm just thinking about this, and it just makes me feel like disgusting, because this is how we look. This is how we look to the powers that be. And I really want you to understand, this is how we look to them. We look like pawns. We look like pawns. And they just move us so they can make the moves in the background behind us. And then we get smoked. And then they forget about us. You know what I'm saying? This is how they see all of us. When you got a social security number, family, you basically got this tattooed on you. It might as well have said pawn. Your social security number, all of that stuff, your birth certificate, that was your registration to be a pawn. Like, I hate to say it, but it is what it is. So now you are obligated into rules that you never signed up for. A pawn never chose to be a pawn, right? They just got set up to be a pawn by the people who were setting it up in the background. You know what I'm saying? That birth certificate, that social security number that you have is just your pawn number. And, we playing the game, so we got to play to win. You could get to a point where a pawn is at the end of the game. And since we in this game, we got to play it to win. That's really what I want you to just understand. But you do got to understand how they see us, family. How they see us, the queens, the kings, the knights, you feel me? It is what it is. And then here you go. Oftentimes you are just an ends to a means to an end. And I hate to say it, but I never lie to you. You know what I mean? I always got to tell you how it is. And we just trying to be the pawns that, since we pawns, hey, we're going to try to be the pawns that make it to the end of the game, that make it to the promised land. You see what I'm saying? But we do know that we will never be able to move like the knights. We will never be able to move like the bishops. We will never be able to move like the kings, like the queens, right? But come on now. It just is what it is. Straight up. We just hope to be the pawns, but you know how it's unlikely. It's unlikely that you could be a pawn at the end of the game, but if you believe in yourself, I feel like you can make it happen. And I was talking to Stock Mo and Uncle Larry about this. And let's see. We're talking about investments. And this is one of the ways that you could get there. Investment calculators. I really want y'all to incorporate this into your life. Investment calculator. I literally just Googled it. This is what pops up. This is the simplest one that I've ever seen. Now, I want you to timestamp this part of the video so you can remember. It's called Investment Calculator on calculator.net. Look at the timestamp of this video. What is it? 54 minutes? And come back to this and watch this. I want you to build your wealth. Now, you think of your starting amount. However much money your account is worth, that's your starting amount. I'm talking your savings account. I'm talking your bank account, any bank account. I'm talking your investment accounts. Add that stuff up. Let's say that you got $5,000 to your name. Boom. You could become a millionaire. Everybody's just journey ain't gonna be the same. But I want your journey to be the one that gets you better next year than you are this year, right? So every single day, I want you to be 1% better. You understand me? You got to tell yourself, okay, in 10 years, and remember, let's say that you're not a millionaire in 10 years. Maybe you'll be in 20, maybe you'll be in 30. But if you don't set a plan, it will never happen. And no disrespect, but let's keep it real. Maybe your great-grandparents, maybe your grandparents, maybe your parents didn't become millionaires, but maybe they also didn't have a plan, right? And this is not to shame them or anything like that. We love them. But now that we can set a plan, we know that we can make it happen. Because first of all, we have each other and we have the information that was held back from them, that they didn't get the opportunity to have, right? So let's take it out. Let's say in 10 years, you get an 8% return, even though on average, you could get a 10% return. This is the key to your wealth right here. Additional contributions. Month. Additional contributions per month. Family, if there was ever a key to success, this is it. This is the most important part. It's not about what you start with. It's not about basically after blah, blah, blah. You can't control the rate of return. But what is in your control, the key to wealth, is how much you contribute to it. Your additional contributions, family. Understand me. So let's say that you could put $100 in it per month. You got to pay yourself. I was talking to Uncle Larry, and I was talking to Stock Mo, and I'm telling you this. We decided to speak two languages. We were speaking English, and we were speaking facts. And the facts is that if you could add your additional contribution and grow this thing, I'm talking about maybe you go drive an Uber. Maybe you try to reduce your phone bill. Maybe you only eat takeout once on the weekend instead of 2 and 3 days, right? Or 2 and 3 times. You increase this number, this additional contribution, then this will get you rich. So let's talk about it. In 10 years at a 10% return, you start with 5,000, you're getting 10%. Boom. 10 years from now, you just $100 a month, just $100 a month, you would end up with 32,000. You thinking to yourself, oh man, but that's not a million. Guess what? If you don't plan, it won't happen. You won't even have this. Now, I just want you to just think for a second. You have, and I'm just trying to keep it real and bring it grounded to a grounded level for you. You have aunts, uncles, you have grandparents and all these other generations above you. Ask yourself, do they have $32,000? And if they don't, it's because they didn't put $100 a month and start with 5,000 or something like that. Maybe you even start with zero. Let's say you start with zero. You start with literally nothing. Let's see where you get. Now you're at 19,000. Do they have 19,000? And again, this isn't to shame you, but this is just to put things into perspective for you. So you can say, oh yeah, I would be just fine. You see what I'm saying? I would be just fine if I start to invest in me. Now, how do you invest in yourself? You start to do things like this. You up this number. That's what's important. Additional contributions. Could you get it to 200? Let's see how drastically, if at all, this moves this 19,000 by just doing $200 a month. A month, not a week, a month. Boom, you basically doubled it to 40,000. And then it says this, you only contributed 24,000. The interest, your money working for you, would have made you 15,000, almost 16,000. You understand? So I really want you to start to invest in yourself. When the new iPhone 13 comes out, maybe, or 14, 15, or whatever comes out, maybe you don't have to get every one. You don't have to get every single one. Maybe every single time you got friends who's going out on this vacation, that vacation, this, you got to enjoy your life. But never go into debt going on a vacation. You understand me? It's not worth it. You got to plan and say, you know what? I want to go on a vacation. And I want to go on this vacation a year from now. So what I'm going to do is I'm still going to pay myself first. But instead of paying myself $200 a month, I'll pay myself $150 a month and then save the extra $50 for my vacation so I don't have to go in debt to go on a vacation. right? So then you see what I'm saying? But you will still always be investing into yourself. And the reason that that is so important is because for the very sole fact that when you get paid, and I said this too yesterday on Stock Mo's Live with Uncle Larry too. When you get paid, this is your check right here. Boom, it gets in your hand, and what happens immediately? You give it to AT&T. You give it to Verizon. You give it to your cable provider. You give it to your car note. You give it to your mortgage. You give it to your rent. So you didn't really get paid. Everybody else got paid. And then I want to ask you, what did you really get paid? What you really got paid was your additional contribution, baby. How much were you able to add to that savings account? How much were you able to add to that investment account? That's what you got paid. That check that came in, that 2,000, that 1,000, that 500, the only money you got paid is what you got to keep. That's what you got paid. And you got to realize that, and you got to remember that. So Purple Monet says, who has a 10% return? This is where I got that number from. So the average stock market return basically for the last 100 years. Take a look at this. The average stock market return for the last 100 years, annual return is 10%. In the last like 10 years, it might even be 16% because we was on a crazy bull market from like 2011 to like 2021. It might have even been like literally like 16% per year. It was going nuts, right? But in the last 100, we want to be conservative here, is 10%. That's where I got that number from. And I want you to remember this, if nothing else. The additional contributions is your key to wealth. What I'm going to work on in the future, I just started my technical analysis class on the Discord. But in the future, just to let y'all know, it's not coming now, but I got this in my mind. What I want to do is a budget boot camp. A budget boot camp so that you can learn how to add additional contributions and supercharge your wealth by tracking how much you spend, tracking how much you actually get to keep, and then, you know what? Adding to that additional contribution and then building that wealth up, baby. So again, I love y'all. I see you over on the Discord. Hit the link in the top of the chat. I'll be in the chat in the Discord again. But if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in index funds. And before I get up out of here, we got to say again, shout out to SHIBA INU for the typical hold time being 81 days, baby. 81 days. Let's go. I love to see it. So again, I see you in the next one, baby. Take care.